Hey everyone, welcome back to Corporate Decoder. Today we're diving into some corporate drama, a potential deal gone sideways, and all the fun financial twists that come with it. It's like watching a reality show, but with spreadsheets. Before we get into it, if you like getting straight insights from these kind of dense corporate documents, make sure to subscribe. We also have a Discord community linked in the description below where you can chat with other smart investors. So picture this, a company called Nabors Energy Transition Corp I, which we'll call NETD for short, was planning to merge with another company called E2 Companies LLC, or E2. Think of it like a corporate wedding, but now things have gotten messy. NETD and E2 are arguing, each saying the other didn't hold up their end of the bargain. It's like a bride and groom fighting at the altar. NETD says E2's claims are totally wrong and has gone to court in Delaware to try and force E2 to go through with the deal. They want the judge to make E2 do what they promised, which is officially called specific performance. It's like saying you signed the contract, now you have to get married. Now, this is where it gets interesting for investors. NETD was trying to get its shareholders to approve something called an Accession Amendment proposal and a trust amendment proposal. Basically, they wanted more time to finish the deal and change some things about how the money is held in a trust account. If shareholders agree, it gives NETD more wiggle room to butt. Here's the catch. Even if all these proposals are approved, there's no guarantee the merger with E2 or any other deal will actually happen. And if a deal doesn't happen, there's no guarantee how much money the shareholders who own what's called public shares will get back. They might just get their share of whatever's left in that trust account, nothing more, and maybe even less than expected if they don't play their cards right. However, if NETD wins in court against E2, there might be extra money available for those shareholders who don't choose to redeem their shares. It's like a bonus prize for sticking around, but if you cash out your shares, you won't get a piece of that potential payout. Speaking of shares, let's talk about what NETD actually has registered. This is where it's important to see the different components. They have units which are bundles containing one Class A ordinary share and a half of a warrant. Think of warrants as options to buy more shares later. These units trade under the symbol NETDU. Then there is the Class A ordinary shares themselves trading under NETD. And finally there is the Class A ordinary shares themselves trading under NETDD. And finally there are the warrants trading under NETD, which let you buy a Class A share for 11.40 fins. If the share price goes above that, theoretically it's good to execute them to buy the shares for the warrant, think 50 cents. If the share price goes above that, theoretically it's good to execute them to buy the shares for cheaper. Of T-Fientu, if the share price goes above that, theoretically it's good to execute them to buy the shares for cheaper Tucky now. This report also talks about the need for a registration statement related to the deal. This registration statement includes a prospectus, a proxy statement, and a consent solicitation statement. Basically, it's all the paperwork and information shareholders need to make informed decisions. They urge investors to read this carefully because it has critical details. You can find all these documents on the SEC's website. NETD also has this information on their website. The point is, it's important to do your homework and read these documents closely before making any investment decisions. The report also mentions that NETD, Nabors Industries, E2 and their people might be trying to convince shareholders to vote a certain way through what's called a solicitation of proxies. So it's important to be aware of who's trying to influence your vote. Information about NETD's directors and executive officers is in their annual report. Finally, there is the standard forward-looking statements disclaimer, which just says that a lot of what they're saying might not actually happen. This is basically a CYA to protect the company if things don't go as planned. The statement says that anything about their future plans, the merger, financial performance, all those things are not guaranteed. They're based on current expectations. They mention a bunch of risks, like the deal falling apart, not getting regulatory approvals, shareholders not liking the deal, and the challenges of merging two companies. So let's cut through the fog. What are the key takeaways here? Well, NETD is in a tricky situation. They're trying to make this merger with E2 happen, but there's a lot of uncertainty. The deal could fall apart, and even if it doesn't, shareholders might not get the returns they're hoping for. Also, any of the forward statements in the filing could not come true or be very different. Now let's assess NETD's direction. On the positive side, NETD is trying to enforce their rights and get the merger back on track. On the other hand, the fact that they're in a legal battle with E2 is a red flag. It suggests there were some serious disagreements or problems with the deal. A notable risk is the uncertainty surrounding the merger and the potential for shareholders to get less money back than expected. One opportunity could be if NET wins the lawsuit and gets extra money for shareholders, but that's far from guaranteed. In conclusion, NETD is a company facing a challenging situation with its planned merger. Investors need to be aware of the risks and uncertainties involved and do their own research before making any decisions. This is not a slam dunk investment. Be careful. Alright, that's our breakdown of NETD's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.